And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my fine furry and one-feathered futures friend traders. It's time for the market forecast. Tuesday, December the 6th. My name's John. Thanks for trusting me with your time. As always, our focus is on context, risk management, and remaining patient. Patience does pay in futures trading, as we all have the opportunity to seem to learn over and over again. This morning, the trade balance came out. That's really the only economic number on the schedule that I can see. We're looking for negative 80 billion. It came out negative 78.2 billion. So good news. And the equities are ready just to look like they're opening steady. Sharply steady, actually. We've got the S&P's dead even right now. NASDAQ up just a little bit. Dow down 33 ticks. So the market's really opening where they pretty much left off yesterday. So stocks are, again, opening steady. Inventory still, investors still mulling potential higher rates after yesterday's economic numbers exceeded expectations. Got to keep your eyes on that, I guess. Even though some of the economic numbers aren't all that impactful on their own, any hint of higher interest rates is enough to spook the investors and traders into selling these markets. What else is going on today? We got the Georgia runoff, probably not going to be affecting our markets. Biden is apparently set to announce his re-election for 2024, according to the Wall Street Journal. And Pepsi is laying off hundreds of people, again, per the Wall Street Journal. So, some of the efforts of the Fed seem to be working in some regards and not in other regards. Crude prices continue to sink as Russia mulls what to do about the G7 price gap. Apparently, there's a glut of tankers outside of Turkey, I guess, something. Consensus on the API released this afternoon at 3:30 Central is a 3.8 million barrel drop after a 7-something million barrel drop from the API last week. So fundamentally, is the market really is that weak? It looks that way on the charts. We got to trade what we see, and we'll see that very shortly on those charts. VIX is down slightly, still just hanging around that 2021 level at 2061. Dollar index off the highs from yesterday, right at 105 right now, a little bit lower. And the yield on the 10-year, right where it was yesterday at this time, 3.5%, but slightly lower on the session. As always, if you like what you see here, tell everybody and hit the lucky like button. Make sure you share, comment, question, feedback, heckle, and love freely. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. We will be going live right after the forecast with Make Hogue Money. We also have Coach's Playbook today. So lots of opportunities for us to spend some time together. And then, of course, the recap at the end of the day. Another announcement. Next Tuesday, Make Hogue Money won't be at 8:20. It'll be at 9:30. It will be on YouTube only, and we will have a special guest, a fan favorite, Anne-Marie Band is going to be there with me. So we're looking forward to a really good and informative session of Make Hogue Money next Tuesday. I mean, I hope they're all relatively good and impactful for you. But I know that Tuesday is going to be a really good event for everybody. So again, that's a week from today at 9:30. What else do we have here? that's about it. We can pretty much jump into the charts. Yesterday I had a hypothesis for the S&Ps, and it looked like early in the session it was likely to play out. And when those numbers came out, those economic numbers came out, they were actually positive. They may have actually, in normal times, been an opportunity for us to kind of look for prices to wander at least to the upside. But the implication that the positive numbers yesterday had on interest rates was enough, again, to scare investors away from risk-on type of investments, at least for the day yesterday. We're right along that trend line this morning. It's going to be another interesting and challenging trading day. They all are, right? So we're going to have some different kinds of hypotheses. And then behind those hypotheses, we should have strategies that we can use in those cases. It was suggested yesterday on the recap that we look more often at the TPO charts. And so we're going to add the TPO charts to what we're looking at today. And we're going to kind of get through these charts so that we can get to make Hogue money today. But some interesting things on those TPO charts every day. And so we're going to add those. Lacey, come here, girl. Lacey, come here. No, don't go down there. You can see that the icicle lights, 50, 60-year-old icicle lights, finally burned out this morning. I plugged them in, they turned on, and they turned off. Kind of a bummer, but that's okay. We'll get some new decorations up there. Let's get into the charts. Enough of this messing around. I'm going to get the daily in the S&Ps here. Lacey's moosing me because she wants to get pet. All right, here we go. So yesterday in the S&Ps, we had a pretty decent down day, okay? Some of those positive numbers scared investors, again, about higher possible interest rates. Lots of questions as to whether it's going to be a 50 or a 75 basis point rate hike next Wednesday when the FOMC meets. So that's part of the issue here. Volume, however, yesterday was relatively weak in futures, for sure. It was a little bit higher on the New York Stock Exchange, but in futures on the down days, that's when the volume really starts to come in. So I wasn't all that impressed with the downside auction yesterday. It did lose approximately 25,000 in open interest. So it's not like we added a whole bunch of new bets to the short side. We were looking at some delta divergences in the previous days. Perhaps we did get a little bit too long at the highs here, and all it took was a little hint of higher rates to scare these markets off. Okay. So this trend line I'm going to be looking at is kind of pivotal on the open this morning. Right? We've got 1, 2, 3, 4, 5, 6 points of contact. The more points of contact, the more valid the trend line. So this is going to be an interesting morning, and I'm kind of excited to have it during Make Hogue Money. So maybe we can find some good opportunities in and around this inflection level. Here's the 30-minute chart. So the market opens yesterday and just kind of ranges for the first couple of hours. Looks to the downside, pulls back, right back to value low from Friday, and then the market finds sellers and pushes us lower through the rest of the session. We didn't close necessarily very well, but not on its complete patoot. 4,003 and a quarter is settlement, and what are we now? We are in range, we are in value, we have no real overnight inventory. So I'm going to be looking at kind of our overnight low and our overnight high as areas of balance initially, and we're going to see if we have an opening range trade here and Make Hogue Money. It's in range, it's in value. Typically, we don't try and do those, but we'll have to see what it looks like when the time comes. So, are we falling into digestion here? Are we going to stay range bound? We don't have any overnight inventory. If there's no bad news or good news, apparently we can't have any good news either. Are investors going to recoup some of the longs that they bailed out of yesterday? We know that when there's no news, the market tends to just kind of grind to the upside. We talked about that yesterday, and then we had news that scared everybody about rates. Patience is the suggestion here this morning. Of course, always is the suggestion, ladies and gentlemen. We have, I see Joe's talking about two-sided trade, and that's kind of what I'm looking at as our overnight low and our overnight high as potential for executions in two-sided trade. So you get a lot of indecision here in the overnight. Little data to lean on. Are we falling into digestion? No bad news or good news theory. Patience. Take a look at the TPO chart from yesterday. Now, this is yesterday's regular trading hours session. I'm going to expand this so we can see basically the whole. So we have some pretty decent excess above. Lots of teeth. Lots of missing teeth, anomalies, little holes. This indicates that the downside auction to the yesterday was not necessarily all that confident. So we're just kind of lacking confidence, and I think in the overnight is showing basically a lot of indecision at this level. No late spike. We do have excess at the low and at the high. We're still looking at potential poor low down here from Friday's session, which was very range bound, awaiting. I think, was Thursday's session, awaiting Powell's speech, which pushed us all the way back up to the levels we just came off of. So not a lot of confidence in this move. Low volume in futures, okay volume in the New York Stock Exchange, and up against an important inflection level. We'll see what it looks like here in Make Hogue Money. Here's the crude oil. So the crude oil added 26,000 in open interest on breaking out below the weekly kickoff level. We went weekly kickoff high yesterday, through weekly kickoff low on good volume and an increase in open interest. That's telling me that the auction is appearing to be relatively healthy, excepting below the weekly kickoff low of 78.30. Last week's rejection or excess at the high here. Now we're starting to look at last week's rejection at the low. Is price getting too cheap? We know that the White House is planning on replenishing the strategic petroleum reserve at $70. Well, probably going to be a relatively decent support level there, right? There's lots of questions as to what the Russians are going to do about the price caps. They're talking about cutting production because they're not going to be able to sell it for more than $70 anyway, or $60, whatever the price cap is. We did have a late spike in the profile yesterday. Take a look at the 30-minute chart here. So here's POW. Here's the overnight test and the relatively close regular trading hour test of weekly kickoff high, blasting through, closing below weekly kickoff low. Last week's low is certainly within range, and that's where we found our excess that we're thinking maybe if we get down to this level, it's going to be viewed as too cheap again. It's quite possible. Here's the TPO chart. Okay, very toothy, lots of overlaps. That's okay. It's not, it's a directional market, so you're going to see this. Does it lack confidence? Not necessarily, and not really, because we did close in the late spike. 76.93 is where we closed, which is right here, which is in the late spike. Well, we are going to be opening below the late spike with a gap. This is the potential highest probability of continuation of accepting of lower prices. So now we're just opening up. I wonder if we're going to see an opening range trade here. Let's keep an eye on this just for a minute, and we'll see if the market breaks out below the opening range. We're opening basically right at the low of the regular trading hour session. We're opening below the late spike. The implication is that acceptance of lower pricing is highly probable. We had about 25 ticks in the opening range so far. Getting perhaps an early test of the overnight low, which is right here, 75.55. I'll just keep an eye on this for just a minute. I just want to watch this. Brody, I see your question there. I got the link for you right there. Glitter. Yeah, the lights went out on me. Those are like 60-year-old icicle lights. And they finally burned out. I'll have to get some more stuff. But, yeah, Croce's Christmas hat. All right, well, we're still in the opening range. We may have to come back and check this out, see how this finishes out at least the first few minutes here this morning. NASDAQ. So the NASDAQ is a completely different market than the S&P is in the Dow. They are their own markets. They're very highly related and usually highly correlated. But this is the weaker of the markets. Brought in some sellers yesterday, actually added 1,100 possible, 1,100 estimated in open interest. So a little bit of a different day. Volume, again, not all that impressive. Got an inside day on an inside day here. Market seems to be seeking balance somewhere in this area. Take a look at the 30-minute chart. So here's the extended trading hours low on Friday. We didn't get through there. We did move value lower. We're holding this trend line. We don't necessarily have the same week low back here from Thursday. And where are we now? Kind of very similar situation. No real overnight inventory. Digestion possibly forming. Possible repair from the toothy profile from yesterday. Same goes for the S&Ps. Patience. We're in range. We're in value. Close to settlement. There's no real change in the overnight of the perception of the value of the NASDAQ index or the S&P index or any of them. Take a look at the TPO charts. We have excess, similar to the S&Ps, toothy profile, again, not showing great confidence to the downside. The crude oil profile, I was looking for the right word. Emotional was the right word for the crude oil profile. This directional, but not confident. Do we have a kind of a weak low here? Here's the low. Oh, hang on. Here's the low from Thursday, Powell's speech. Is it relatively low? Is it relatively weak because it matched the overnight? I'm not looking at that necessarily. But we do have excess at the low here in the NASDAQ. Do we have, this is an overnight, I think. Yeah, this is an overnight low. Does that make this weak? No. In my opinion, not really. Overnight inventory, overnight trading doesn't include the longer time frame traders. And I want my information to come from when everybody is available and making an effect on the marketplace. So the market is in range, in value, probably more likely to repair and kind of go range bound like Joe is saying. Patience, though. Remain patient. Always patient. Here's gold. So we had an area of balance here. We're creating another area of balance that is just sitting right on top of the previous area of balance. That's not necessarily all that healthy for continuation or a healthy upside auction. We want to see the areas of balance separated by some directional activity. We're not necessarily seeing that now. The overnight inventory, we lost about 8,500 yesterday, so some pretty serious long liquidation, which is going to remove some selling power from the marketplace, some initiative selling power away from the marketplace. We've had the dollar soften a little bit overnight, so the market is inside yesterday's extended trading hour range, and kind of finding support at the top of the previous day's balance, at the low of the current balance. Early rejection of previous balance. We looked into it. We're rejecting it now. Here's the 30. In range, in value. We had several distributions on the way down. It was an emotional move to the downside that closed right on its patoot. No late spike. We are holding some overnight longs that seem to be reconciling now. Here's the TPO chart. Okay, good. Haggle matters. So here's the emotional move yesterday. It kind of mirrors the S&Ps, but a lot more emotional. 3 distributions really of time and value and volume. Well, we're opening between them. Possible repair. Overnight high was just opening, probably leaving relatively close to the opening range at the high of the session. Little repair maybe down to this level. We've got an anomaly down here, which will be attracting eyeballs, and what traders are looking at, they're going to bring price to. So overnight inventory a little bit to the long side. Already reconciling. Again, stay patient because we are still in value and in range from yesterday's session. Last thing we want to do is get banged up here. The 6E. Good morning, James. Good morning, everybody. So here's the euro. Again, the dollar softening a little bit. We've got the euro kind of looking to the upside. We had some longs falter yesterday. We lost about 1,500 in open interest. Not tremendous, not great volume either. So we're still holding upside structure here. Got to watch the dollar, of course. Seems as though we're starting to form a little bit of an area of balance here. We had balance here, directional activity. Now we have balance here. It looks to me like the euro's a little bit healthier in the auction department than gold. Take a look at the 30-minute chart. Where are we? We're in range. We're in value. We are looking at possibly some overnight longs that are already reconciling. Man, stay patient in these markets. These ranges are short time frame control. When we're in value, very little change to the perception of value of the euro. Better trade locations are likely to come later on in the session. Now let's take a look at the 10-year. If I was trading the 10-year, I would be holding way back about getting involved in this market. It's just idling, looking for information a week from tomorrow. Look at the volume yesterday. And this is a market that's already rolled over to the March contract. Volume putrid yesterday. We lost 16,000 in open interest. Lots more people just kind of probably going to be sitting on the side. It's waiting for the FOMC. We got a lot of time between now and then. We got an inside range and an inside range. Take a look at the 30-minute chart. Inside, well, we just matched yesterday's low, but again, we're in range, we're in value. We've had a couple of opportunities to get a little bit long in an overnight inventory. I believe we are there now, but the market is really just seeking value, seeking balance here. Friday's low, Friday's high, the extremes of those balances. Anything on the inside seems to be much of a random walk to me. So I got to just be patient, wait for the opportunity to trade at more important levels. I'm going to take this off. Still haven't really tested this naked point of control. Natural gas, fascinating market. Good volume on the extension after the gap lower, adding 7,000 in open interest. The auction process to the downside here seems very healthy. As we all know, there's nothing that we can guarantee. Anything can happen. ECH, anything can happen. But sellers seem emboldened. They are seeking continuation. We have plenty of space down below. Okay, we have weekly kickoff low was here. I've got another one set up down below that here. It's about 470. About 470. Let's see here. 30 minutes overnight shorts. All right, so overnight shorts will probably largely burned up by this consolidation through the better part of the evening. We've tried to close the gap so far. We've been unable to do so. So we have gap rules here. We also had a late spike yesterday. So we've opened below the base of the late spike. Where is the base of that late spike? Right up here, right around 559. 559. So this market could close the gap, can come all the way up to the base of the late spike before really finding any rejection or resistance. Right now, we've been unable to close the gap. So if we're unable to close the gap relatively early, subjective term, yes, we're looking for opportunities to trade in the direction of the gap, which would have us looking for shorts. So, let's go back and see what's going on with crude here. Okay, we've looked below the opening range and we've looked above the opening range. So, that is potential overnight inventory. If we can't close the gap relatively early, similar to nat gas, we're still looking for opportunities to sell this market. Okay, we did have the late spike in crude. Also, I want to tell you the base of the late spike is right up here, 77.32. So without acceptance above that level, we're still going to continue to look for shorts. We've been unable to close the gap so far, and gap rules state if we can't close the gap relatively early, yes, I know that's a subjective term, we're going to go with the direction of the gap, which would have us looking for shorts. Just some kind of context, nuance. You know, we're always looking for context and nuance and ruling reasons for our trades. And I find that the gap, late spikes can be wonderful ruling reasons to take opportunities. The question is where. Always be thinking about your best trade location, where the trade proves to be wrong, and limit your risk on all of those trades. Joel, I was reading your message here while we were doing the forecast, and I think that's hilarious. I'm going to use that for on my wife tonight. I'm going to say, yeah, you burned 3,000 calories today. That's funny stuff. Joe, hypo, look for a two-sided balanced trade. Look to trade to overnight high where we meet the low volume node, then 40.15 where another low volume node, both low volume nodes from 11.10 CPI. Look for exhaustion to take a short. Thank you, Joe. I'm hoping to see you for the Make Hogue Money today. Fred, you're here. Hope to see you for Make Hogue Money. Hope to see you all for Make Up Money. JD long got stopped out on that spike down. Nice fake out. Well, it does happen. Just make sure you limit the risk because you want to continue to have opportunities throughout the day. It's early. It's about 8:15. Let's take our deep breath. The Trader Machine, 0 defects. See you in about 5 minutes for Make Hogue Money. If I don't see you, get out there and profit today. Trade well, stay patient, limit the risk, stay centered. We will see you shortly. Trade well.